Hello and welcome to yet another Equity for Keeps video. In this video we're covering Walt Disney Company. In recent days we've heard that they've been competing with the likes of Netflix in the market cap leadership. So the approach we're going to use in this analysis are as follows. So the stock in question, which is a Disney company, must close above the 200-day moving average 60% of the time over the last 2 months, and then in the last eight of the last trading days as well, and be within one standard deviation of the 200-day moving average trend line. We're going to consider put call ratio, the short interest, the MACD, and recent pullbacks, and probably discuss other things as well. So this is the chart of the simple moving average for 200, 50, and 20 days, as well as that of the price. So we can see the yellow lines, the yellow curve up there, standing alone is the 200 day simple moving average. So it's clear that within the last 2 months, which is what we can see there from today, or from the last trading day, which was the 11th of May, to then, if you go back to 2 months, it will be 11th of March. You can see that Disney's price wasn't close to that of the simple moving average for 200 days. And then for the last 10 days, or 8 of the last 10 days, that's also the case. It wasn't close at all. So indicating that Disney has underperformed its simple moving average for 200 days, indicating that it has seen better days, in price. So the standard deviation of the price of Disney from its 200-day simple moving average is 2, which is it could be better, but still not very far yet. At the same time, not so wonderful. So the put call ratio for 30 days, and 1 day are 1 and 0.4 respectively. For 30 day indicates that the put interest and the call interest are well balanced, and for 1 day it indicates that there's more interest in the call side of things. So the short interest we can see is 1.32%. And then it would take, it's worth about $2.6 billion, and it would take 1.1 days to cover. And then this is the chart of the MACD. So here we can see some crossovers, and they occurred coincidentally when some momentum was about to occur, or was already occurring. And the recent one here also a clear indication of when one momentum, one price movement upwards occurred as well. So we can see there obviously there has been some attempts to maybe test resistances, but not anything close as such. But obviously, yes, there has been a pullback, but it's not of recent as such. If you consider what has happened of late in late April, as you can see on the chart, then it might be enough. But we're not really going to see any. We're not really going to consider this a pullback. A pullback will possibly be a case where we have seen a continuous or an upward trajectory, and then a correction. But what we can see right now since March for Disney is pretty much a sideways movement. We're not going to really call this a pullback. So this is how it compares with the S&P US Communication Services Index, the S&P Global Communication Services Index, the S&P 500, the S&P Global BMI. It has underperformed all of them for 1 month, 6 months, and 1 year. So you can see the ETF holding companies there as well, the list. So well, we in the long run, this ETF, the hedge funds and the ETF companies, that are holding that issued these ETFs, they're not going to look at this. The other things we haven't pointed out here. They pay dividend of about 1.6, $1.68 or $1.76 per year. So that is probably about less than 1% of or thereabout of its share price. So for some hedge funds, for some investors, that might be enough interest. But for the retail trader, that I wouldn't really recommend Disney as such. And even though it has its popularity and other stuff, but the other thing as well is that it is currently being affected by being more of a bricks and mortar company as against Netflix, that is pretty much digital and currently enjoying the current lockdown. Even though, of course, they are also doing so, but the fraction of their streaming services relative to the entire company isn't very much. And any improvements, any gains that occur from their streaming services may not really improve things, or may not change the outlook and their performance. Okay, thank you very much for watching this video, and don't fail to subscribe to our channel. Thank you.